Hello guys, we should be on live from the trading room, so hi everyone, hope you had a nice weekend. As usual, let me know if on the technical side everything is okay from your side, if the sound is good, if the video is good, as usual, and say hi on the chat guys, as usual. Hi Paul. No, I don't think because the queen died, markets have moved because of that, but I have other probably explanation or assumptions why actually markets are moving that way. And it's going to be interesting to discuss about that in the trading room. So let's wait a few more minutes to let time to other people that being late, and then we're gonna start. Hi Bob. Perfect. Okay. Good job, Bob. Yeah. That's good. That's good. Take it easy. $100 today. It's already nice. Don't look big. When you have an 80K account, don't go for a 2% trade in one day. Take it slowly, and it's only the right path to be successful in the long term. Okay, play with low volatility in your account. Don't bet high in one trade. I think you guys already know about that. Hi Lucian, how are you? I wish I could eat some French food in Thailand. I can send you a delivery if you want. Okay, let's move on, guys. Okay, first things, as usual, dollar index. And I will continue by looking at this asset and this index, let's say, for the next months. This is for me again the key currency and the key asset that will impact the stock market and that will impact other currency. Dollar was very strong during last week. We make a new high. See, it was like we had 110. Today we are opening at 108. The dollar index opened with a gap down. So you might also see in the euro dollar and the pound dollar a gap up. Okay, as you might see here. Let me show you actually. Okay, so for example here. For example here, gap up, and the pound, the market almost closed the gap here, for example in the pound, but we will not so much. There is few pips. Tried to close the gap, we didn't close, and then the market pushed already 80 pips from the opening at almost 100 pips from the closure Friday. So let's say the other currency are being a bit stronger by the beginning of that week, and there are actually two main reasons. Maybe some of you guys in the chat want to tell some assumptions why macroeconomically the euro dollar opened with a gap, or the pound dollar, or let's say the dollar index went down. There are actually two main reasons. The main one, I believe you guys should know, but The second one is a bit more complex to understand. This guy is a trend line, lol. If it's the first time you came here, Wiki, I'm not using trend line, definitely not. I'm using something that's called reversion to the mean. It's easier for you guys to understand what my point of view regarding the market. Definitely sometime I use trend line. It will not letting me, it will not be my execution point for having a trend line, but it's only to show the trend. It's only to show the average price. Actually, in the dollar index, the middle line, let's say we will put it in, in red. This is the average price. Okay, so we were at the mean, let's say, last week. And then actually we are at the extreme zone. Okay, we are actually, if we have Bollinger Bands, for example, here, it might be 20 standard deviation, come back to the extreme point. So this is something I used. If it's the first time, don't take it easy. Okay, I think I have some delay in the stream, so I might get your answer a bit late if you guys want to answer regarding my questions. But let's talk maybe about the main one, which you guys might be aware about, ECB, which is the European Central Bank hike interest rate. This was something the market expected. Okay, so for me, actually, this was already priced in the market. But there are the second reason is a bit more complex, and I think this is actually the key reason regarding why actually the euro dollar and the pound dollar pushed. Also, the indices continued to push on the upside. Also, European indices, you see here, we have the DAX, we have the FTSE. What we have, the S&P also is opening green today. And the main reason is Ukraine that's starting to push Russia a little bit outside of their borders. So they're starting to fight, and the market is actually expecting that the situation might become better. So it reduced the pressure we had on the energy crisis that we have in Europe. If you might be aware, guys, Russia is one of the biggest producers in gas and oil, and there is an energy crisis here, so it's pushed the indices down. It pushed the euro and the pound. Let's say the dollar gets a strain from that. And actually, I don't know if this is a good news or not, but the market react positive to that news, that Ukraine starting to fight and to react from the war. So yeah, that's the second reason, and it's more from an energy let's say scenario that the market let's say starting to modify their behavior. If we go to the euro dollar again, so yeah, we open with a gap. Actually, in the last 4 hours, the market retraced. That's also something I'm ready for generally when I'm talking about reversion to the mean. Generally, when we have a huge movement up in one side, okay, the market tends to go back to the mean, which is exactly the case here in the M30 minutes. And again, the market can continue probably from here on the upside. So yeah, you see this huge movement get far from the mean, and then we start the retracement. The market get back to the mean, and then we can continue. This is again something that I've been working on this theory a lot of time, and I will try to continue explaining that, because again, it's a theory that you should, let's say, I'm actually applying that with different tools. Okay, you guys can use moving average to understand when the price move back to the mean. I'm using Bollinger Bands in order to get the volatility, but here. And if we look to the higher time frame, which is the daily chart, the market is still on the downtrend. Okay, we didn't break any structure yet. We will see this even clearly. I will still continuing by identifying this trend, and today again we touched the extreme zone, which is also the Bolliger here, which is the 20 standard deviation. The market react. If the market expect again that pushing Russia away from Ukraine is a very positive and good news, and that hiking interest rate will fight inflation, so yeah, the euro dollar can push from here. Again, technically, I wouldn't open a buy actually at that position. Okay, I would not open a buy. I would eventually wait to break off the structure. Okay, we will make, I don't know, a new high from here. We have a lot of key zone. Okay, we have this 1.03 area, which is the low of that point. We have also this area. We have also this area. Okay, so they are actually the key zone. I'm still identifying those key zone from last week, guys. I delete actually the lines and put it again because I have this plan in mind for a lot of time. And actually also the market, if we go to lower time frame, for example, in the also in the daily chart, the market is actually turning around this area, which was actually a long consolidation zone. Maybe we can, on the H4 it will be enough. You see all this zone here, it was maybe a few weeks of ups and down in the euro dollar, no lot of pips movement. And then here we had, I think, the first hike in interest rate in Europe, I think. And then the market retraced. Everything went down. We make a lower low in the euro dollar, below 0.99. I think the bottom point was 0.98,600. And then the market pushed after the news we have. But again, here at the bottom, we had already a huge divergence. Okay, we have already a huge divergence in stochastics in the monthly chart, for example. As you see, guys, here it's the bottom. I don't know, we have a lot of divergence. That and that. Okay, so again, it's only technical. You should add, when you look at the monthly chart, you should add the fundamental analysis to what you look for. And if I want to talk about the dollar yen, I see a lot of people in the chat talking about the dollar yen, short dollar yen. I explained it, say again, last Wednesday probably, that the market is overextended. It's way too far. The market pushed so strongly on the upside that at some point the market will react on the downside. We don't know when, but what is important to know is you must put a stop loss above the top. I don't know where you might enter actually on the dollar yen. If you go to the weekly chart, on the monthly chart, actually I think the market stopped actually here. No, this is not interesting me. Oops. View market watch. No, view market watch symbols. Okay. View navigator. Okay, this might be good. Up. Okay. Yeah, thank you, Lucian, for again remind the traders on the chat that it's only for educational purposes. Even I will not advise any trades on my trading room. First of all, I will only provide my analysis and what I think about the market. And if you trade and if you decide to make any execution on your side, this is from your own discretion. But if you go back to the euro dollar again, on the short time frame, let's say if I look at the M30, okay, here might be on M1, for example, a short scalp to make on the long, for example, with a very tight stop loss. The fact is that if I look at the daily chart, the market you already reject. Okay, I don't know if it's too late already to open a sell. Might be not if you want to hold the long swing position, but the market already react. You see, I think the market already react at the point that we might want to enter. How much pips? This is maybe here we will open a sell. It will already 50 pips. So the market already moved 50 pips from that point. But on the H1 we have also a clear trend line. Say clear movement up. The market can go back. Yeah, this might be a buy on trip, for example, also. Yeah, generally on Monday I like to make weekly forecasts and don't like to open some position. Maybe here again might be a great spot, at least to have a retrace to this demand from the London session. This is again too strong for me. Yen players are gunning for dollar yen 147. Yeah, I read that, Bob. I don't know if the price can again reach 147. The fact is that you don't want to be actually locked actually in the long position on the dollar yen. Actually here, let's say that the market make an interesting retracement, so why not having a tight stop loss for a long position? You see it's already a great bullish trend here, but again, this is how I view the market. I will not be locking myself in the long position. The market can retrace even more. It will be very difficult to manage here long from 142 to 147. Again, difficult to manage. Yeah, and again, interesting in gold, the market tends to respect this support, which is 1,680, which actually hold for almost 2 years, guys. I don't know if you look that, but we touch plenty of times this support, which is a demand, actually for gold. We have huge inflation, so again, I believe that gold will push in the long term. But yeah, we had multiple opportunity last week to make a buy some spot here. On the weekly chart, it looks like we will go back to the mean again. It looks like we're gonna reach this green line. Okay, maybe not green. I will do it on blue. Okay. Okay, so this is approximately the same setup I've been talking a lot of time. Reversion to the mean. If we intend here that the market on gold is at the extreme point and that gold cannot push below, of course, as a trader, you might have a risk management. Will, for example, put a stop loss below and sell here at the average. Okay, some trader will tell you, okay, I buy the support, I sell the resistance. Here, the blue line is not a resistance, for example. It's the average. Okay, there is here, when the market goes back here to the blue line, we are at 50% chance statistically to get back again and make a retest to the lowest point or the highest point. So as a trader, you want to get in and get out by maximizing your profit. Okay, regarding the Nasdaq, guys, and let's say the US indices in general, I found an article talking about the CFTC position. If you know, guys, what is CFTC? It's, let's say we take all the aggregate position of banks and institutional funds. Retail, but retail, you know, it's actually in the Forex market, in the indices market is not a lot, but hedge funds, banks, institutional, let's say, and you have actually the net exposure that those institutions have in the indices. Let me find this again. I don't know if we can find it on internet. CFTC indices on. Yeah, I have it on my phone. I think I will try to send you to share with you this this chart. Just one moment. I'll just need to take my phone and put it on OBS. Might be okay or not. Wait, hold on. Okay, I think this might be good. Yeah, CFTC needs reports, exactly. That I'm talking about CFTC reports, Lucian. Okay, let me find the. Okay, I think we have it. Okay. Okay, so this was actually the things I was talking about. This is the CFTC position. You see, it's a yearly report. Okay, so you see each year is year 2022, 2021, 2020. So we got actually the net exposure, non-commercial. So we are talking about big institutionals. In 2020, we were already 0.3 million contracts short on the S&P, so indices in general. When we talk about S&P, I believe it might be the same on Nasdaq. If the S&P will push up, all the US indices will push up as well, and it will move back the European indices as well. But you see on 2020 here, I think it was actually the COVID, okay? So the net position short in the S&P reached around this line, which is 0.3 million, and then the market moved up very strongly, go back to the mean. And if we identify what's happened here in 2020 or in the S&P, guys, this is the weekly chart. This is in 2020, so all people were short. A lot of people were short in this starting this year. Okay, so here it's when we start touching, okay, the net maximum net lot short position in the S&P. The market moved up, and you see what's happened. We make a new high. Okay, what's happened today? Again, we reach a huge net short exposure in the S&P. We might see a recovery. So again, we might expect a new high. In my opinion, it will not arrive in the next few months. The market needs still to, to digest the inflation and all the new regulations. So what I believe is that the market will, ups and down like we see last week. Here we had a huge bounce. Again, the market went down. So we will continue using this type of ups and down like that. We won't see a new high very soon, but it might arrive in the next few months. Not the next few months, but the next year. I believe by the end, let's say 1 year from now, we might have a new high in the S&P. So this is what I think. But again, if we go to 2015 or 2011 or 2008, which is the subprime crisis, again we reach lowest, which is very interesting. Okay, again, we say that history repeats itself. Again, we don't know. Maybe the market can have a net exposure more important than what we have right now. But again, this is very interesting to find this type of chart, guys. So yeah, interesting. Again, it will not give you any daily positioning advices, but it's more like long-term to discuss. But again, it's always good to have a long time scale of what can happen in the market to understand when you want to, if you want to have a swing position, what type of fundamental analysis you want to bring into that position. So, that was interesting. Yeah, I want to see a lower movement, at least on the Eurodollar to start opening a buy. We might have a reaction here, which is starting of the demand. Yeah, well, I identified it also as well last week on the dollar CHF. That this movement here might be a good short. That's actually what's happened. We had stochastics. Yeah, it's like huge consolidation zone. We have double bottom or triple top also here. Market get back to the mean at least. But we might be looking for a buy at any point. This looks like the VIX. What about you, or CHF? It might be also an opportunity here. Your CHF keep dropping very highly. Yeah, actually there is the opening on Wall Street, so let's try to see what's happening. 9:30 Eastern time right now, opening in Wall Street. Yeah, also the S&P opened with the fact in the indices we opened with a gap up, and yeah, the market covered the gap. Okay, so the market closed the gap at the London session and then continue. Again, this was also a nice zone for entry for people that were awake actually on the London session. And again, this was coordinating with that point also. Yeah, it looks like the market want to push. We had, let's say, the market had very positive news that the market didn't price. Okay, the fact that Ukraine starting to fight back Russia, the market didn't expect that. The market did price the hike in interest rate in Europe, but the fact that the energy problem that we have in Europe might be finished soon, the market did not, let's say, expect that, and didn't price it yet. Yeah, it's very strong opening here. Yeah, guys, very strong opening on the indices, on US indices so far. We might see the same in cryptocurrency. Maybe let's check that on here. We can put BTC or Ethereum. Be the same to understand the context. 2.50% up in the Bitcoin. Again, I a lot of time explained the contrast between risk on and risk off environment. Again, if you guys want to know more explanation on that in the chat, let me know, but I explained it plenty of time. I believe that this might be understandable from your side. Risk on, risk off, the dollar, which is a safe asset, stock market, which is known as a risky sector, crypto, which is also very risky. So we have all the time this balance between where investors want to put their cash to, of course, expect a return in their investment. So you guys as a trader must understand those balance between risk on, risk off, where the money goes out and where the money goes in. Okay, this is one of the basics. Yeah, nice rejection here. We'll probably get back to the mean. Again, you see when we have a nice movement, have the market tend to go back to the mean. Here it was too quick. The market was strong on the upside, so I wouldn't go for that one. Here on the M5, we don't have stochastics yet. Again, euro yen long guys would be problematic for me in my case, and how I view the market. Okay, you might be saying long. I might be saying not to go long, especially at that spot. Okay, when you see already the daily, let's say, if you are looking for the yeah, let's say the daily chart. Okay, of course the market say, okay, the market breaks out, I will buy. But the market is from already a long bullish trend from here, which is, I don't know, 900 pips without any retracement. And you want to buy here. First of all, I will, in my, again, this is, I'm trying to think with voice, okay, what my mindset as a trader will tell me. I will not make a buy here, for example. Why not opening a sell? Depends which type of indicators and which type of risk reward I can have. But yeah, here on the daily chart might be very difficult. Market can go back to the mean might be here. Yeah, interesting. I don't know if I would open a sell actually here. Yeah, we have starting up having a first rejection already. Not enough. But for sure, actually, the market is battling at this zone, which is 144. This is for sure. Okay, here might be my point actually for an interesting scalp. Not the best execution again. This is not my full entry. I would wait for to gap close, for example, maybe here, that spot, to continue with the trend. Yeah, approximately here. Yeah, again, here you see that my risk reward is around 1. Okay, generally I don't take this type of trade where the risk reward is 1. I'm aiming for much more than that. The fact is here is only the starting point of my position. I'm only building my position here. If the market gets down around 40 pips from here, I will add in again. Then my risk reward will be higher than 1, of course. I'm aiming for 1 to 3 risk reward for that one. If from here the market react already and push, so that's fine. Okay, on the Nasdaq we get back to the mean on the M1, we pushed again, make a new high. On the S&P this might be the same. Yeah, we are struggling to break it, but we're gonna break it. This is going to break, I think. Okay guys, anyway, I will manage this position. I will do the trading room tomorrow as well, so I might be discussing about how I manage this one. If the market push, I'm going to close it probably at the top, even a bit below, in order to not be greedy. And if the market continue to dance around here and probably get down to my second entry, so we will be able to see that together tomorrow. So in any case, I will make a summary of this trade for tomorrow, guys. Again, thank you guys for being with me today. 2 big things to remind: ECB hiking interest rate. So the market, I believe that the market already priced it for the euro and for the pound and for the European currency or European indices as well, to fight against inflation. So actually this is giving some pressure for the euro dollar and let's say European indices. The second thing is Ukraine is fighting back Russia. The market is actually expecting let's say the beginning of the end of the energy crisis in Europe. And the last thing is the CFTC report I just shown to you at the end of the session. We are actually in a huge netting short position in the CFTC report in the S&P. This might be the turning point, as we see already in the COVID crisis in 2008, in 2015. So this might be the turning point again for that year. I believe that the market already digest the inflation and the new regulation, and that the market actually need to live with what we have. Again, might be another risk, another signal for us as a trader to understand that we start switching from a risk off to a risk on environment, guys. So that's my conclusion for this Monday forecast. Thank you guys for being with me until the end. I appreciate your time being with me again. We're gonna meet each other tomorrow. Be careful, trade with strong risk management. Goodbye, guys.